This is Barry Zalma on insurance. Today I'd like to speak about the nature of underwriting. Before an insurance claims adjuster ever begins a claims investigation, he or she must understand the nature of underwriting, because it is how an insurance policy comes into existence. Underwriting is defined as the process of accepting or rejecting risks. It requires the determination by the person called an underwriter of the risks for which insurance is sought and the terms under which the insurance will be written if the risk is acceptable to the underwriter. Underwriting insurance is a function unique to the insurance industry, which enables the insurer to transfer the risk of loss from the person or entity insured to the insurer. 3 centuries ago, insurance originally was a very personal matter. A property owner would discuss with an individual insurer the problems, values, and risks of loss involved in a commercial enterprise. They would then agree upon the terms under which the insurer would insure the risk. Together they would draft a contract and the insurer would sign his name at the bottom. He literally underwrote the insurance. When the Lloyd's Insurance Marketplace started in Edward Lloyd's coffee shop, policies were often written in chalk on a blackboard, and those who wished to join in the insurance would sign their name and the percentage they wished to take of the risk under the terms of the policy written on the board. In its original usage, underwriting referred to the operation of the insurance business. In those days, the underwriter was actually risking his or her own funds in the business of insurance. Today, in application, there is a more restricted meaning applied to the term. Underwriting in modern usage is a systematic technique for evaluating risks that are offered to an insurer by prospective insureds. The function of underwriting involves evaluating, selecting, classifying, and rating each risk. Underwriting establishes the standards of coverage and amount of protection to be offered to each acceptable risk and to each acceptable insured. It formulates and administers the rules and procedures that are used to ensure that predetermined standards are met by underwriters. Underwriters are the risk takers. Today they don't risk their own funds, but they risk the funds of the insurer who employs the underwriter. Adjusters only become involved when the risk becomes a loss, and the adjuster is called upon to keep the promises made by the policy created by the underwriter. In the U.S., underwriting has become more corporate and clearly less individual. Underwriters are now invariably employees of insurance companies and never put their personal fortunes at risk, except, I guess, as it hopes to keep the insurer viable so that the underwriter can be paid. The process of underwriting involves 4 basic functions. 1. Selection of risks. 2. Classification and rating of the risks. 3. The policy forms to be used to make up the contract of insurance. And 4. Retention and reinsurance. By performing these 4 functions, the underwriter increases the possibility of securing a safe and profitable distribution of risks so that the insurer can profit from the insurance risks accepted by the underwriter. Adjusters are the representatives of the insurer who fulfill the promises made by the underwriter when the risk was taken. They, the underwriters, must determine that the decision to insure was based upon accurate facts and that the underwriter fully understood the risk he or she was taking. Underwriters, believing that the applicant reports facts to the underwriter honestly and in good faith, recognizing that the covenant of good faith and fair dealing implied in every contract of insurance applies equally to the insured as it does the insurer, weighs the hazards faced by a particular property before agreeing to take on the risk of loss. Underwriters take information from adjusters after a loss to reevaluate the risk decision, to be certain they were not deceived, and to better evaluate the risk taken so that they can deal with future requests for renewal or increases in coverage. Sometimes an insurer will ask the adjuster to perform a pre-risk inspection to determine if the risk is worthy before the underwriter makes the decision to accept a risk for insurance. Usually, however, information from the adjuster is provided to help the underwriter determine whether to cancel, non-renew, or continue on a risk, or modify the policy and premium before agreeing to continue on a risk after a loss. If the adjuster develops facts during the claims investigation that the underwriter was deceived when the risk was accepted, grounds may exist for the underwriter to make the decision in conjunction with the claims department that the policy should be rescinded or declared void. In one such case, a policy for one of my clients was issued to a jeweler who represented that his jewelry business was in a secure office building. His suite was on the 13th floor of a 20-story office building with great security. And he suffered an armed robbery. And when the adjuster arrived at the scene of the loss, it turned out that the business was located at the correct address in a single-story structure without any great security. This information was provided to the underwriter, who advised he never would have issued the policy had he known the truth, and the policy was eventually rescinded. Similarly, there was an application that warranted a security guard 24 hours a day at the premises. It said there is one security guard. After an armed robbery where there was no security guard, the insured testified that it was an error. He didn't mean one, he meant none, and someone had accidentally left off the N. Of course, the O in the word one was a capital letter, and that was also found to be an intentional misrepresentation. With knowledge of underwriting and the decision-making process used by underwriters, the adjuster can properly conduct the thorough investigation required by law. Without an understanding of the factors weighed by the underwriter, the adjuster does not know what questions to ask when conducting a claims investigations. Some of the most important factors considered by an underwriter before accepting or rejecting a risk for insurance, with which an adjuster should be familiar, follow. First and foremost, the moral hazard. The moral hazard is defined as the increase in uncertainty caused by personal acts of individuals. These acts may contribute to the probability or severity of a loss. The individual creating the problem may be the policyholder or another person. In either case, the chance of loss is increased. A moral hazard may be present in every line of insurance. No underwriter can ignore it without incurring an increased risk of substantial loss. The moral hazard is very difficult to detect and therefore very dangerous to an insurer. Moral hazard is the term used to denote the incentive that insurance can give an insured to increase the risky behavior covered by insurance or to intentionally cause a loss to profit from the insurance. The adjuster should also understand, as do all underwriters, that there is a thing called the morale hazard, or lack of self-interest. These are cases where the ownership of a property is less desirable to the insured than the proceeds from insurance. One example would be an outdated building situated in a business area with a high concentration of business and a shortage of parking space. The owner might receive rent from tenants but could receive more if the building was raised and the land used as a parking lot. Under such circumstances, there may be a temptation to start a fire, or at least to avoid taking steps to prevent a fire, so that insurance money could then be used to level the building and turn it into a parking lot that will provide more rent than renting the building to a tenant. Similarly, the person who is unable to meet the payments on a loan and is faced with foreclosure can present a moral or a morale hazard. The property may not be saleable at a price high enough to repay the loan because it's upside down. The policyholder may fear a lower credit rating if foreclosure begins. When any of these conditions exist, there may be a temptation to sell the property to the insurance company by means of a loss. Moral and morale hazards are sometimes determined by finding a record of questionable acts. The most obvious example is an applicant who has had one or more questionable insurance claims. Arson for profit is difficult to prove, and allowances are made for coincidences in order to avoid prejudging a person, but the claim may be on record as a questionable one. A record of questionable non-insurance transactions in the past should also provide a clue to the character of the applicant. The underwriter who ignores an insured's history will likely cause the insurer to pay for a repetition of it. And sometimes the only time the underwriter can learn of such a history is after a loss and a report from the adjuster. Criminal convictions for a crime of moral turpitude like fraud, embezzlement, theft, burglary, or misrepresentation is an adverse underwriting indication when an insurer agrees to insure a person against the risk of loss to real or personal property. It is promising to put its money in the hand of the insured. No reasonable or prudent person would put his or her money in the hands of a convicted felon without taking exceptional safeguards. Bankruptcy, tax evasion, complaints, fraud, or a record of paying debts late should all be taken into account when the underwriter is weighing the risks of insuring an applicant, since these types of problems faced by an insured can raise either a moral or a morale hazard. If the underwriter receives a report of a claim from a reporting service and that database service of all property insurance claims is adverse to the insured and the statements made by the insured in the application, the underwriter should give careful consideration to whether or not to accept the risk. The underwriter should also give careful consideration to the business reputation of the potential insured. And if the underwriter learns the proposed insured is engaged in unethical practices such as multiple civil lawsuits, whether the insured is a plaintiff or a defendant, vendors who require cash payment from the proposed insured, a high turnover in personnel at the insured's business, a diminishing customer base, a history of never using the same vendor twice, liens on the property owned by the insured, an insured who only uses independent contractor day laborers to perform work on structures, and an insured who performs remodeling or renovation without the use of a general contractor. All of these can be considered a potential for establishing a moral or morale hazard. In addition, the underwriter must consider the physical hazard and whether or not the property is in sufficient good condition to avoid any losses, any potential losses because of its poor physical condition. And this physical hazard denotes an increase in uncertainty caused by objective material factors that include the physical condition of an individual or an individual structure, the construction elements of the property, the materials used in the building, the number of stories, the number of fire divisions, its occupancy, the degree of police or fire protection available, exposures from adjacent buildings, climatic and weather conditions and expectations, location and facilities for controlling or minimizing losses. All of these things are considered by the underwriter to determine whether a risk is acceptable or unacceptable to the insurer. This video was adapted from my book, Zelma on Insurance Claims, Part 102, 3rd edition, which is available as both a Kindle book and a paperback from Amazon.com. If you found this video to be interesting or useful to you or your colleagues, please pass it on. It's free. And please also subscribe to my YouTube channel and my Rumble channel. And please click on the like button or the Rumble button when you view the video. You should also consider subscribing to my blog and to my Substack publications, including the training course Excellence in Claims Handling that will be published on Substack. Thank you for your attention.